Is this the moment where Ghana real estate implodes? Is this the hammer blow that resets the market completely and causes the bubble to absolutely burst? Because major change doesn't happen from individual developer decisions or pockets of demand changing. It comes from major policy change. And this policy change is set to have the biggest impact. It's likely to send shockwaves throughout the whole real estate ecosystem. In this video, we'll talk about the policy itself, what it changes, who it affects, and most importantly, how the opportunity landscape completely changes for you. So what is the policy? Well, the headline is Ghana's real estate industry will incur an additional 20% tax on all real estate purchases across the country. 20% is huge. That's market moving. Now, that headline doesn't give you all the detail. So in order to get there, let's understand a little bit about the policy, its journey to date, and also the common misconceptions that sit around it. So to go back a little while, let's go back to December 2022. December 2023, the VAT Amendment Act was passed. It introduced a 5% flat rate of VAT on rental and sale of immovable property by estate developers and persons who rent out commercial property. The 1% COVID levy was added to bring the total to 6%. So the tax burden prior to this shift was only 6%. Estate developers were defined broadly to include companies and individuals engaged in construction, renovation, or supply of property with a profit motive. So not only companies, but also individuals. But how do you classify them? Well, GRA's classification up to factors such as frequency of transactions, modification, renovations, and activity around marketing and financing. Here's a key point. Residential dwellings and agricultural land remained exempt. Flat rate tax was announced December 2023 and was implemented fully in January 2025. But this is where things completely shift. There was a new act introduced, the VAT Act 2025. This act repealed and consolidated the previous VAT Act and all amendments effective of 1st of January this year. Here are the key changes. The abolishment of the COVID levy. Fantastic, that needed to go a long time ago. But then the recoupling of the National Health Insurance levy and the GET Fund, 2.5% and 2.5% respectively, into a new VAT base, combined 5%, which reduced the effective rate from 21.9% to 20%. Remember, there was a flat rate tax for real estate, which was 6%. So the VAT, which is 15%, plus the National Health Insurance levy and the GET Fund combined to a 20% tax. Okay, so for general purposes, the tax went down a little bit. Effectively, the COVID levy got removed. But the key element is there was an abolishment of the VAT flat rate scheme for goods and real estate. So the new unified rate of 20% applies both to residential and commercial property sold by VAT registered developers as of 2026 January 1st. So every purchase that you make is subject to 20% additional VAT, or if you like, call it 15% because of what was there before. Private individuals selling their own dwelling or agricultural land remain exempt. Key point, spoken about the policy itself, the journey to date, who it applies to and who it does not. Let's walk through some real examples to see the impact of this particular VAT. So here I have a VAT calculator. So let's take an example. Recently, I saw a studio apartment in the center of town advertised for $110,000, right? Which is the higher end of what studios should be anyway. So let's say $110,000, calculate the result. So pre-2026 January 1st, that would have cost you $110,000 plus 6%. Now, your final bill will be $132,000, a $22,000 increase. Now, if you take into account that some studios, their service charge can go as high as $200 a month. Let's say, argument's sake, is $200 a month. That's $2,400 a year. Over 10 years, you have to find another $24,000. So all of a sudden, your 110 purchase over 10 years is looking more like 156. And that 156, or even the initial 132. So you can see the seismic change that is happening, right? There are even, let's even use some higher end calculations, right? I've seen real estate being advertised, apartments in the center of town are $250,000, right? $250,000 pre-1st of January to post-1st of January 2026 means a $50,000 change in what your end price, $50,000. So all of a sudden, your $250,000 apartment is now $300,000. And this is the point where you start looking at the opportunity cost of purchasing. Because for that $50,000, how many plots of land could you buy on the outskirts? Maybe some in some semi-prime areas. It's just money that's evaporated. Obviously, the motive behind it is obviously to raise capital and maybe even cool the market a little bit. But the impact on developers and buyers alike is big. I'm going back to the real examples. We've spoken about those who are classified as estate developers having to charge this VAT or pay this VAT. It gets passed on to the end user. But we remember private individuals do not have to pay the VAT. So if you're a formal real estate developer, all of a sudden, you are 20% higher than private individuals. So the demand profile is going to completely shift towards private individuals where you can avoid this tax. Now, there's real detrimental impact that can happen in the system. So what do I mean by detrimental impact? Well, a significant portion of all financing for these developments is off-plan sales. Any market crash or correction is going to impact the wider economy. For example, all of the workers that are on site delivering projects are going to be impacted by the reduced demand, because effectively, if prices go up by 20%, some people will not be able to get the mortgages. They won't meet the affordability threshold anymore. They will come out the market. Transactions will reduce. Transactions reducing means that funding reduces. Funding reducing means that investment in reduces. And the overall slowdown starts to take place in that sector. Right? And that's really an important point, because there are other policies that's happened internationally I'll talk about later that affect specific sectors of the housing market. Now, this is really impacting the formal real estate development sector in Ghana. And we need all of those sectors. Even, it's not everything that's high end. Even at the low end, this is impacting. This is not tiered, which I think it should be. Between X amount, 0 to 100, pay lower, 100 to 200, a little bit more, 300 to 400 more, and then over 500, you take the vast majority of it. It's blanket. Absolute game changer. Moves like these are the ones that significantly slow down markets. Okay, so what are the early reactions that are happening in the market? Well, let's start from the buyer or the investor side. Many people now, if they had $150,000 purchase, now have to find an extra $30,000 to take care of the VAT. If they had $100,000 purchase, now have to find an extra $20,000 to take care of that. Some of them are having to pull out the market completely. Some of them were rushing to make payments before the end of last year to make sure that they weren't impacted by this. Some of them are now going to be in a better position to negotiate payment terms and things like that, because the developers can't afford to lose these transactions, because losing those transactions is effectively losing financing. Some people may have to push their capital to other investments, whether it be other real estate types, etc. This isn't a joke, and it's not being taken as a joke in the industry. So this is what makes it even more important that you have ground research that enables you to unearth the value that sits beneath the kind of noise and the hype. That's the services that we offer at Kura. On the developer side, there's a number of options that are happening. I'll talk to one right now. So this particular developer has acknowledged that obviously this is changing. So it's a harmonization of several levies, which is true. That's how they're describing it. So the total effective rate is 20%. Now, the effect takes place January 1st. We've spoken about. And what they've said, pre-2026 payments, any payments fully received before January 26 are not subject to the new regime. Installments on VAT. VAT is only implied on outstanding balance payable after the effective date and is generally charged proportionally to your payment rather than being deferred to completion. So you can't defer it. So let's say you're planning to make 4 payments of $10,000 this year. right? Payment a quarter. Every time you make that $10,000 payment, you have an extra $2,000 to pay. So over the course of the year, you'll have to find an initial $8,000 you hadn't accounted for as you did this payment plan before. So for example, if you're putting a 5K deposit down on an apartment, that 5K now is 6K, an extra $1,000. So you as investors have to be categorically sharp and ask the question, is this inclusive or exclusive of that? This particular developer is doing something that I'm seeing in other areas. While the 20% rate applies across industry, this developer is taking steps to provide superior value, absorbing costs for specific projects, and they've made a commercial decision to absorb 6% of the VAT, leaving clients responsible for 14%. Now, this is all in the language. Remember what we discussed before. The previous rate was a flat 5% plus the 1% code. So that's 6%. So they're not changing. They're not changing. You are left with the bill. You're left holding the bag. They're talking about taking steps to provide superior value, but really they've not given anything up. You are left holding the bag. So, between buyers and builders or sellers, the sellers now have to create incentives to keep people in the transaction, to keep funding going. I'm hearing about extension of payment plans. I'm hearing about, absorbing of some of the tax costs. One developer has absorbed it 50-50, so 7.5. You're still left with an extra 7.5%, but still, they know how important it is to keep the transaction going. Now, this is what I see and I analyze about the market. But what's happening is actually the sellers have to adjust, have to offer incentives and things of that nature. So let's talk a little bit more about the buyer impact. Now, the buyer impact is no joke. It's, real terms, net delta is like 14% more tax than you would have had to pay on a big purchase, right? This is some of your lifetime purchases. So many buyers that I know in the network and through the research that we've been doing have been pressing forward payments. Those who are forward thinking to make sure their last payments were done before this new tax kicked in. And I'm on good knowledge that some of the key players, even in the industry themselves, didn't realize that this was coming and this was such a big issue. But this provides a major issue for new developments coming in, pricing at ridiculous levels, which were already, not selling to high levels and increased supply. Their price points are based on the modeling that they've done and the profit they want to extract from the market. So buyers have to be very diligent. Extremely diligent. That's why we do our deep dive market research for buyers to understand, what is the price? There's a difference between a sticker price and then the 10-year lifetime price, inclusive of tax, inclusive of service charge, because all of a sudden you can start looking at other options. Ghana is a very varied market, very varied market, with infrastructure coming up all over the place that will see growth in some areas and decline in others. Now, all real estate markets, the key enabler, the key way to understand the market is transaction, not just price, right? Because transactions are going to enable you to understand the delta between asking and actual transacted price. But transactions are also the thing that's going to enable to understand the investment coming into the ecosystem. Right? So this is a real major issue because if on every transaction you're putting 20% demand, it's not even like it's a relative demand change, like 20% of the market leaves. No, it's almost exponential in nature because how many people are falling out of that affordability bucket for mortgages? How many people are pulling out of this deal and moving to other deals? All those kind of things. It's crazy. Now, the market is very aware of it. Developers are very aware of it. I think there'll be extreme pressure on the government to remove or stage this tax because the impacts are long lasting. It's not as simple as, yay, the price is going to come down. Some prices will go up. Remember, the private sellers, they've got this delta now where they can profit from with demand moving that way. That inevitably will bring prices up. So you've got to be super sharp. But as I say, the ecosystem as a whole suffers. Less work is given out, less transactions happen, all of these kind of things. Okay, so let's talk about some international comparisons of policy changes that have completely flip or transform market demand. One close to home for me, being from the UK, is the Help to Buy initiative. Help to Buy equity loan in England was a government-backed equity loan for new build homes specifically. So similar to what's happening in Ghana, it targeted a particular sector of the real estate development portion. And this was designed to help buyers with smaller deposits and mortgage while also stimulating new build demand. So the way I often looked at it was, well, is it Help to Buy or help to the developers to sell? Because there's some key mechanics. This was new builds only, right? It channels demand into developers, not the whole market, right? Like this initiative will channel demand towards private sellers and not commercial or not company real estate developers. Buyer deposits were typically 5%, with the government coming in with equity loan, 20%. So imagine that. You only had 5% of your mortgage. Let's say it's a £200,000 house. So you only have £10,000, but the government come in with 20%. And it was 40%, I believe, in some of the central London. That's a huge amount, a huge stimulus to the market. What did it do to the market? Well, it supported home ownership and the supply, because effectively, in a way, mortgages were underwritten by the government to a certain extent. A bit like subprime, to be honest, because all of a sudden people who couldn't afford the 20% or 25%, typically you need 10% in the UK as a minimum, only required 5%. You bring a whole heap of new demand into the market. So the UK National Audit Office said that it increased home ownership and housing supply. The government expected a positive returns as loans were redeemed. But what also happens is the knock-on effect, which is the new build prices went up. And I saw that personally when I was at Property. So a meaningful proportion of the subsidy got capitalized into prices. So effectively, that 20% subsidy just shot the prices up by 20%. May have been good intentions, but ultimately it was serving the builders. I'm sure Ghanaian developers would love that kind of incentive. Now you can see how this is a little bit of the inverse of what's happening in Ghana. So what happened in the UK when that benefit and that scheme was removed? This is the real lesson for Ghana, because in a way, this is what's happening, but in a different form. So what you saw was kind of cliff edge behavior. Buyers were rushing to qualify. Developers were pulling incentives forward to make sure that they captured that demand. And the market in general was worried about supply and demand after the scheme closed. Now, the major developers have publicly pushed for a revival of this kind of support because their entire supply chain pipeline is based off that. Similar to Ghana, everybody's supply chain pipeline is based off of their projected sell prices and net sell prices, right? All of a sudden, you have to charge 20% more. Transactions leave, buyers leave the market. What happens to your pipeline? How can you finish your construction without that kind of funding coming in? So what can we learn from this experience? Help to Buy shows how quickly policy changes can affect demand in real estate, how markets react when that support or policy is changed. And Ghana VAT changes are a different tool, but the behavioral pattern is the same. Buyers will retime or reassess their purchases. Developers will have to adjust their pricing or share the burden of the tax. And then the confusion around who pays becomes market friction. Now, I've seen it personally when the Help to Buy was in place versus when it wasn't, because I was in the market at that time. I saw others use Help to Buy. And what you found was Help to Buy was also in line with general low interest rates. So low interest rates plus government incentives, prices skyrocket. Right? I remember when I was trying to get a family home, all the salespeople tried to push me to the highest point, right? But why don't you just get this bigger one anyway? Interest rates are low. You could go Help to Buy. And I'm like, no, quote to my side. And then boom, interest rates go up. Help to Buy is removed. Supply prices start to come down. Time on market goes up, right? People are struggling to sell their homes because buyers have left the market. Those people who could only afford 5% now can only afford 5%, right? Or that what was their material 5% has to be the 10% towards something else. So their attention has to move. And with the interest rates increasing rapidly as well, right? From like 1% to 5%. People were seeing, even I saw massive increases in my monthly mortgage payments. People were seeing £300-400 a month, right? Put in the comments below if you felt that changes, and they have to commit to them for 5 years. So what happens? People put their houses on the market for sale, try and get a little bit of equity. When the supply increases, prices drop. So these are all market moves. I'm saying this because of the parallels that happen within the Ghana real estate sector with this change. Okay, so what does this mean for Ghana's formal versus self-build? Now, Ghana, we have a culture around self-build. Buy a land, get a contractor, build your own home, which is healthy in this scenario. But the problem is the deficit is only going to be achieved by companies who construct, the closing of the deficit, companies who construct in areas that are further out, etc., mortgages being available and affordable, things of that nature. Adding this 20% on, or however you tend to split it, is going to affect a lot of people's affordability. So effectively, it's a bit of a downside to Ghana's formal real estate construction market, because those individuals have been in the system paying their flat rate of VAT, and all of a sudden they expect to pay more. They're going to expect to pay to pass it on to the end user, but the end user, not all end users are going to accept that. Most people wouldn't accept that. Why would you accept or not reposition yourself if you had 100,000 ready to go and now you need 120,000, or a mortgage agreed at 100,000, now it needs to get agreed at 120? How are the banks going to react? Can they shoulder that risk? It's the whole ecosystem that gets affected. So I do believe incentives will increase and markets will move. The demand and the attention will move. People will probably do more self-built. People will probably work with more kind of contractor base and those kind of things. It's going to be a shift in the market. So the likely impact on the construction and housing supply is that construction in the high end, it will reduce. It may have its budget ready to keep on going, but then the sales will slow, transactions exit. It's a real issue. And I know the developers are seriously concerned about this shift. And not only that, they are lobbying hard to get some sort of adjustment. And I understand where that comes from. It's a big shift to the market. But the housing supply, the demand is still there. How people now address the demand is going to be different. As I say, what people's tastes are or wants and desires is going to shift and change. But I'm hoping this doesn't slow down construction in the areas that need it most. I will probably do another video to walk through what the experts are saying. But long story short, this is a major policy shift which impacts the entire real estate ecosystem. So the opportunities and the value will become rarer and rarer. I would like you to look into Kuro's services so we can help you uncover those hidden, undervalued opportunities through market analysis and data. Links to all of that in the description. Please join in the mailing list so you can get insights on policy shifts, pricing shifts, hidden opportunities. All of that is in the link below. Let me know what you think in the comments below. Until next time.